the commentary on our results. Foremost, I am very happy to announce that this quarter, December 31st, 2017, has been historic for Yes Bank, at least on two very major accounts. One is our total assets, our total balance sheet for the first time in our entire life cycle, in our evolution, has crossed 2,50,000 crores. Our advances also crossed 1,50,000 crores for the first time, and this happens to be our 51st quarter. The total capital funds of the bank now have aggregated to an amount of 43,596 crores, so which translates into an overall capital adequacy Crore of 19.5% and an overall Tier 1 ratio of 14.7% and a Set 1 ratio of 10.7%. So overall increase in capital funds year on year has been 62.3%. The bank has approximately added about $2.5 billion over the last approximately 5 quarters to capital funds. And as you can see, the overall capital adequacy is almost at an all-time high of 19.5%, allowing the bank to grow steadily in the future. Our growth in advances was fairly high, overall 46.5%, given the comeback in corporate growth, fairly robust corporate growth, accompanied by augmentation of retail banking advances, which have more than doubled in the last 1 year to 11.8%. And along with MSME advances now aggregate to about 32.3% compared to 31.1% about a year ago. The asset quality of the bank for this quarter continued to be stable, and the aggregate credit cost of the bank for the full year now is 64 basis points, and for the quarter specifically it was 18 basis points. I'm also pleased to share with you that Yes Bank is the first bank to establish a medium-term note MTN program on the global securities market in India, which is part of the India International Exchange at the GIFT City in Gandhinagar. We are also happy to report that Yes Bank in December was included in the S&P BSE Sensex for the first time in its life cycle, having been a part of the NSE Nifty for over 2 years now. The bank also on international indices such as MSCI, ESG, SRI was included for the first time based on very strong operating performance on environmental, social and governance parameters. Moving on to profit and loss key data points. As you will see, that our total profit for this quarter once again exceeded 1,000 crores. The first time we did that was in September, when we just crossed the border of 1,000 at 1,003. For December, this number has gone up quite significantly now to 1,077 crores, which is a growth of 22% compared to the corresponding period last year. I do want to mention that this 22% in itself is fairly significant if you really look at the impact on the treasury gains, which was fairly large in the corresponding period compared to the corresponding period. And so 22% factors in the adverse impact on treasury as a result of a significant shift in the yield curve in the quarter gone by. Net interest income of the bank was 1,888 crores, representing a growth of 26.8% 8%. Non-interest income was extremely robust, grew very robustly at an overall level of 1,422 crores, representing a year-on-year growth of almost 40%. Total net income was 3,311 crores, representing an increase of 32.1%. Operating profit was at 2,002 crores, representing an overall growth of 37.7%. NIMs were fairly healthy compared to last year at the same level, 3.5%, and the cost to income ratio was at 39.5%. On NIM, I do want to mention that the bank was somewhat impacted by about 10 basis points as a consequence of very significant bond raising, perpetual bonds of almost 5,415 crores, which were AA rated and raised at 9%, plus Tier 2 bonds of 4,000 crores that have been raised in the last quarter, which were priced at 7.8%. The pricing looks very good compared to the current yield curve, shifts that have taken place. But the blended cost of this on the cumulative amount of these Basel III compliant bonds, 9,415 crores, was 8.5% compared to our base cost of funds, which is around 6 to 6.1%. So there is a temporary dip, and it is most likely that given the overall growth curve of the bank, given the CASA accretion, which is looking extremely satisfactory, and given more organic production of PSL, which is happening, that we'll be able to achieve our objective, medium-term objective of getting to 4% NIM no later than March 2020. I do expect it to happen sooner, but our objective is no later than March 2020. So overall, if you see the ROAs of the bank were at 1.7%, and the ROE at 18%, even though we raised capital just about 3 quarters ago. The book value of the split share, the 2 rupee share since September, is now at 106.8 rupees. On a cumulative basis, I do want to mention that the overall profit of the bank is 3,045 crores. So in 9 months, we have pretty much crossed 3,000 crores PAT, which is an increase of 26% compared to the corresponding 9 months of fiscal 16-17. So as you can see, the P&L has demonstrated fairly sustained delivery, and our operating outcomes and metrics continue to be extremely strong. On balance sheet, overall, as you can see, the bank is increasing its market share and also improving the overall granularity of our loan portfolio. The overall total assets of the bank grew by 36.2% to a level of 2,65,432 crores. So we are now a medium-sized large bank in our country. And this, as I mentioned to you, is a very significant milestone in our life cycle to get to this level. And we are hoping that in a couple of quarters, we get to well past 3 lakh crores.